Omer Bin Ahsan, how are you today?
Good, alhamdulillah.
You are running the most successful fintech startup in Pakistan, is what I'm told. But I still can't figure out what exactly it does, because the words that are used to describe what it does are so big and complicated that it just goes over me. So in the most simple terms, tell me what exactly does Haball do and how it makes money.
So first of all, success is a measure that we can, label this perhaps later, because at this point in time, I still think we're building a lot of things. But just to simplify what Haball does in three simple terms. Whenever two businesses interact, they need to get an invoice, make a payment, and if there are any credit terms, someone needs to give that credit. Haball has basically digitized these three core interactions between any two businesses. So let's say if Nestle is selling bottles to a distributor in Jhang, so that distributor needs to get an invoice from a valid tax invoice from Nestle, and then be able to pay against that using any bank of his choice, any digital channel. Nestle should be able to realize those funds in real time or in the same day and reconcile it across Pakistan. And then, because sometimes there are credit periods in this, and most of the time the distributor or the manufacturer has to finance that credit, they would want to switch to alternative sources of credit, such as the banks. So then Haball pools that Islamic liquidity that's available across banks in order to finance these transactions, looking at the payment and invoicing data. So yeah, it sounds a bit complicated because it's three-part, but if you really break it down, it's invoicing, payments, and financing, but all merged into one platform that we go and sell to the likes of Coca-Cola or to Continental Biscuit or to Tapal. These are the organizations who would use the platform to receive money, to send invoices to the distributor and to the tax authorities. And using that data, then a bank like Meezan Bank or the Islamic Bank or Habib Metro will come in and finance those invoices.
But isn't there a limited customer base for this? Because Pakistan is the land of cash transactions, right?
Yeah.
I would say 50% of this economy still runs on cash. Properties are sold on cash. That level of work, distributors selling Coca-Cola and biscuits, a lot of it is cash. Why? And they do cash because of the flawed tax system that is in existence, which you've also been a part of or seen closely. Why would this business model work when 50% of this economy is still running on cash and has no desire to shift?
So, yes, the mass market adoption would face that resistive block that has chronically now relied on cash. Their business models are working on being not taxed. And as a result, they don't want to come into this realm. However, there is still a very large base of, let's say, 25, 30,000 distributors, 100,000 retailers who are part of the value chain of hardcore FMCG sales or consumer goods, even electronics or automobiles. These are chains that are, I would say, 60 to 70% documented and perhaps banked as well, but underserved. That they would still have some interaction with the bank. Maybe it's an open check or cash being deposited at the bank, but at the end of the day, it's banked in some segment. So retailer to distributor, payments might still be cash or check, but distributor to manufacturer might be check, cash. That's the first leg that we're trying to digitize, because that's the head of the supply chain. About 500 to, the large tax-paying units, almost 5,000 of them. These are the organizations that contribute almost 75% of sales tax in Pakistan. These are some of the supply chains that are very transparent, if not completely transparent, but significantly transparent. So we started with them. And the reason why we chose them is, one, their willingness to be more efficient, to be more digitized post-COVID, not have any supply chain disruptions as a result of this manual cash ingestion model. Also, they like to remain compliant. A lot of these are multinationals. They don't want to break any laws within the country. And the other reason is that tax is already priced into their margins. So there's a tax anomaly that Pakistan has, that even though we have a value addition tax, but most of the consumer items that we use are third schedule items, which means that they're taxed at the primary sales level not at the retail level when you buy those things. Which means that the distributor really doesn't have any incentive to now hide his revenue. He's already been taxed against the sales. So we picked out those segments. These are like 500 companies that we targeted first. And another reason why we targeted them was these are the brands that are in your house, that are in everyone's house. We're talking about, Coke and Unilever and Nestle and Tapal and National Foods and English biscuits or Continental biscuits. Every household, every grocery that you go ahead and do, they would have this edible oil or atta or biscuits or confectionaries, beverages, home care item, personal care, toiletries. These are some of the items that we targeted deliberately. And because we felt that these are supply chains that you can't run. You can't run a retail operation, a shop, without having these things. But you go to a store that doesn't have, let's say, Coca Pepsi, or does not have Nurpur, or does not have Allpurs or Milk Pack, you would obviously go to the stores that has availability of these things. These brands have power to influence supply chain behavior. So you have to figure out a way on how you can hop on to their ability to be able to influence distributor behavior and retailer behavior. And that really worked out well for us. Back in 2022, we got some of the largest supply chains using us for payments, for invoicing, for financing. And that's how the numbers started swelling up.
But I want to come back to that for a second. Like you mentioned 100,000 retailers, right? Pakistan is a market of, if I remember correctly, it's over 600,000 actual retailers.
More than that.
More than that, right? Let's say it's a little short of 1 million.
Yeah.
Of that, 100,000 are sort of the large, slightly more documented, formalized retailers, right? And from that, you've got the large modern trade. And then you've got the international modern trade, which is a small component, which is less than 10,000.
Yeah.
What you're saying your business does is it actually brings into the fold these large people, the large retailers and the large businesses that want to operate within the ambit of the tax system. And that's why they are 70% of the tax contribution.
Yeah.
What about the rest of them? Because there is an entire economy of over 500,000 retailers that A, are not part of it, B, have no desire to be a part of it, right? So are you saying then is Haball operating in a market of 260 million people, but it's actually a market of 30 million people? Because all of Pakistan will never, ever go towards this direction.
So what we're experiencing now is adoption in the first segment, or we call it a top-down approach, where we're picking up some of the qualified supply chains that are compliant, that want efficiency, that want digitization, that don't want to break any laws in the country. And it's easier to convince these guys because they need that efficiency. If you're getting money after 5 days because of a bad banking infrastructure, you're getting it in the same day, that obviously is a 4 to 5 day float recovery that you're experiencing. If your credit unavailability, because you're financing those credit, limits your ability to expand your markets, then we're offsetting it by providing this extra liquidity sponsored by Meezan or Al Falah or Allied Bank and being able to enhance your sales capacity. So yes, it begins with able and willing and compliant. That is true. How does it go across that? The real problem of the country? See, behavior has to be driven from the top. I know a lot of fintechs, and you probably interviewed some of them, are doing the bottom-up approach. A lot of startup funding came for the bottom-up approach, which is we're going to go to each Karyana, we're going to go to each SME and digitize that node because there are like 3.2 million, 5.2 million SMEs.
The numbers sound great, right?
The numbers are fantastic, but
you can't change their behavior.
Yeah, but with my life at whatever interactions that I have with FPR, I realized there was something fundamentally skewed towards this side of the economy. Like 5.2 million, let's say, MSMEs, that's probably SMEDA's number. 3.2 million industrial commercial connections, people actually professing that we're doing some form of business. There might be a lot of duplications over here as well, but let's assume it's 3 million. Then the actual amount of people who are registered in sales tax to the Federal Board of Revenue is close to 400,000.
Wait, so let me just
kind of... It's a dramatic drop.
Right. So you're saying there's 5 million registered small and medium enterprise. Okay. Of the 5 million, we're also saying anyone with a connection, gas connection.
Electric connection.
Electric connection.
Yeah.
is 3 million. So
And they say that I need an industrial or commercial connection because the rate is different.
got it. So 60% of that number, let's say if we use that as a base, has an electric connection for commercial or industrial purposes. But of that number of people, only 400,000 are taxpayers. Registered.
Not taxpayers.
Wait, sorry. So you're saying that registered doesn't mean you are a taxpayer.
It doesn't mean that, because you could be a null filer or a nil filer.
So of that 400,000, how many do you think are actually filing?
How many do I think? No, I know that for a fact. Close to 150,000 are actually filing returns that at the end of the month, they end up paying something to the state.
Got it. Okay. So quarter of that 400,000 is paying something to the state.
We're talking about sales tax. We're not talking about
sales
income tax or customs, right?
Got it. Let's just keep it simple, right? Yeah. So in a market where of 3 million people who have an industrial connection, only 100,000 are paying tax. To me, the business model Haball has, I'm not going to say the word fail. I'm going to say the word is capped.
Yeah, absolutely.
You will never grow beyond a certain limit because you cannot change behavior. Or can you change behavior?
So even within these nice guys who are responsible citizens and behaving, or perhaps absorbing these ginormous taxation, the taxation is, there's no excuse for it. It's oppressive. For the guys who are still surviving with this oppression in whatever way that they're doing it, even this market, in terms of their credit need and their digitization and their banking needs, is highly underserved.
And so this is
so first of all, from a Haball purely profit maximization perspective, this in itself is 100 trillion rupee throughput space. Now let me tell you why.
This limited market
is 120 trillion rupees of money movement. And this is the funny part, that FPR gets to see only 66 trillion of it.
Sorry, break that down for me. I want to simplify it. Yeah. This segment, everyone documented, doing the right thing. Good guys, is running 120 trillion rupees per annum of throughput. Someone paying someone.
Yeah. And we get to see it somehow.
Okay.
Either banking or invoicing.
And this is all documented throughput, taxable documented throughput.
No, taxable documented throughput that FPR claims is 66 trillion rupees.
Why is that half of this number?
Because people aren't declaring it.
Okay. So there is actual throughput of 120. Yeah. Taxable that FBR is declaring is 66 million. So you are going after that 66 trillion market, essentially.
So that in itself is a very large market.
It is a very large market.
And then the 100 trillion number, but the overall B2B segment of Pakistan, which includes everything, agri-value chain, service sectors, manufacturing, FMCG, retail, wholesale, that is perhaps 60% of your GDP with a velocity of money of 3 to 4x. That's about almost 250, 300 trillion rupees of money movement. That's the real Pakistan, right? That's the Pakistan that we can't see. It's like, a jinn where it's there, we have never really seen it. So it's there. We have evidence of it appearing because obviously 250 million people are being fed somehow.
Yeah, but one thing you said, I can't shake it. Why are they underserved? I mean, the banks have been around for a while. They make bank, literally, they're doing really well, especially on the Islamic banking side. So clearly banks are making good money. Yeah. And yet you say that this particular segment of the economy is not served well by the banks.
Okay, so that brings us back to the genesis of Haball. I was working for digitizing FPR collections, that you could pay your taxes online. I was doing that on behalf of FPR, and I realized that there was no single aggregated model where any taxpayer could pay to FPR through any bank of their choice. So we did this partnership with FPR State Bank as our bank and OneLink, and we orchestrated this whole aggregation network. Now, when you open your mobile app and you see FPR as a biller, I was on that project where we built that, and I realized that's the issue. All of these large businesses, a Coke or Unilever, have to work with 8 banks to collect across Pakistan, because Pakistan is, 200 cities and distributors. Any large supply chain needs a minimum of 300 to 500 distributors to serve Pakistan adequately. So they need a large array of banks to bring that cash in. And Coca-Cola would then have to have an agreement with each one of them and have some sort of reconciliation with each one of them. So this is where Haball came in. Haball is Arabic for the jugular vein. And I said, I'll just build one pipe, one API that connects to all 35 banks. I can pull money from wherever I want and put it into Coca-Cola's account on the same day and reconcile it. So that's a fundamental problem that was not being cracked by these banks while serving them, but not being served through digital means. That they expected people to come up on branches and give it in cash or check. So in order to digitize it, I had to build that one aggregation layer. So yes, they were underserved. The second thing is that the entire banking approach, even now, is please come to my office, come to my branch, come to my portal, and I will serve you. And the world has changed. Post-COVID, you need to be embedded into supply chains. You need to, your payment experiencing, your finance, your invoicing has to be embedded within the community, within the nuances of that community, whether it's language or usability or that one commercial experience where you have to be embedded. And unfortunately, the banks have, even now, have not invested into being embedded into it. So we were the first ones to say, no, the power of corporate payments or corporate collections or corporate finance has to move on the corporate side. So our Haball actually sits on top of the ERP of Coca-Cola, of Unilever. And through that one aggregation pipeline where we can pull payments, we can finance it, we can send the invoice to FBR, we created those one API that Coca-Cola would just procure from Haball rather than talking to 35 banks. So that's that problem that we identified, that there is a issue over here, that banks are not serving this, and the banks are not even cooperating with each other to come up with a solution.
Why is that? The banks don't care?
They're competition. They don't trust each other.
No, so that they don't trust each other, that still makes sense. But still, I mean, someone should have cared, right? Like, it's a customer that you can go after. You could have built the tech and you could have really captured this market. Any bank. I mean, if Meezan can come out of nowhere in a 20-year period and become what it is today, one of the banks could have thought of said, hey, listen, why don't we build this little platform that aggregates all of these payments?
So you answered. I think Meezan was one of the first banks that said, Haball will be your custodian bank. Let us, because we can't actually hold money. State Bank doesn't allow us to do that. So Meezan became the first bank that said, why don't we do it? We'll be your custodian bank. And they understood that.
And what is it different about Meezan and versus the others? It feels like the banking sector of Pakistan, everyone seems to be complaining about it because it's just sitting there printing money and they don't really care. Is that...
Yeah, the Dutch disease, easy money, treasury is giving you money. There's no incentive. The bonuses will come. I'll go back, have my Kiev at Synth Club and tee off at 7 a.m. It's not, I've been very vocal about this. I think there is the incentive structure around the treasury yields does not incentivize them to innovate or take risks downstream.
Does this
a lot of people
require...
have said that. I'm not saying anything new.
Does the banking system require an overhaul because it is not serving people?
So, see, this is where Meezan broke that. Meezan has the most decentralized deposit base. It's retailers and MSMEs that chose Meezan for either the Islamic banking, but one of the things that people are ignoring right now is the quality of service. Meezan really worked hard. I mean, people like Irfan Siddiqui and Arif al-Islam, they really worked hard on making sure that the quality of service at the branch level never compromises. And, you know, you've heard names like Irfan Siddiqui and Arif al-Islam many times, that these are the guys who built the bank. But now that we've worked with the bank for the last 8 years, we can see across multiple layers of the bank, people like the new CEO, Syed Amir Ali, you know, the same kind of spirit and DNA, but more on the corporate side. And then people like, people who are still with them or people who've already left, like Ijaz Sahab, who's gone to UBL now. I mean, this guy was, legendary sort of branch management behavior and the quality of service, the commitment to quality of service, and the kind of humility. You walk to a bank, and I remember as a beginner when I started Haball, I was sort of, you fear that this is this towering capitalist institution, and I don't know what I'm going to face. And these guys are probably the masters of the world, and they know the world better than you. And then you start interacting with people and that myth starts to break and you're like, they're ordinary guys. And in fact, some of them are really stupid about a lot of things. And then you meet people at Meezan who are like very humble. They're like, we're not here to educate you. In fact, we're learning something from you. And let's try it out. What's the harm in trying it? When you're sitting on so much cheap liquidity, nothing can go really wrong, right? As long as you've kept the right guardrails. So this whole experience with Meezan has been at least very rewarding. And I can see it across multiple lines within that organization.
And this experience doesn't exist with the other banks. None of this, the customer service, the entrepreneurial
friends, but
the entrepreneurial nature, the decentralized deposit base, the willingness to try something new, take the risk. This doesn't exist.
So let me break it down. We have agreements with 12 banks today for financing. There are about 2-3 banks where we have multiple agreements. Like we can do a lot of other things with them. So the maximum amount of agreements that we have with each bank would be 2, at most 3.
Right.
With Meezan Bank, we have 8 agreements to do different things. Not all of them are profitable, but just shows the willingness of that bank to say, yeah, that sounds right. Haball has the same Islamic ethos. They're attacking a problem where they're perhaps faster than us. MSME financing, supply chain financing, digitizing corporate payments. Let's support them. We still win because whenever Haball makes money, we also make money. So I think that attitude at the top, Irfan Saab, Arif Saab, and now with the new leadership, ever since Omer has taken over, we've signed 2 more agreements. So it's the same sort of DNA about humility, quality of service, partnerships that has really helped Haball. And I have no shame in admitting that a lot of success that we've achieved has been powered by Meezan as well.
So if I was to flip this, what you said, can I take away the fact that the banks that have one agreement with you are arrogant banks in some sense?
Some of them, yes, but not all of them. I think it's also a learning journey. When some other bank does it successfully, then the next bank wants to join the bank.
The Me Too.
Well. Yeah. So there's a lot of Me Too banks over there as well. Good banks as well. Really depends on the leadership and how much they're owning the fintech collaboration. There are still some heavyweight banks that see fintechs as insignificant, or the fact that why don't we just learn the idea from them and do it ourselves?
Yeah.
And the funny part is then they don't do it at all.
Yeah.
It's like, fine, you've learned it from us and then you'll attempt it yourself. But a lot of these big banks, they're really not doing it themselves. They're just sort of...
Is it because incentives are not aligned, or it's just the culture isn't there?
Incentives, interdepartmental rivalry, predominantly incentives. But a lot of it has to do with...
I mean, why? That's an easy one to fix. It's literally it's a compensation. It's a compensation problem.
Yeah,
aligned benefits, bonuses, where you make 60-70% of really big bonuses aligned towards creating stuff like this.
Yeah.
How hard is that to solve?
Apparently, they don't want to. It's easier to reward quarterly performances and annual performances when it's headline numbers, revenue, profit after tax. And they will chase that. And that comes easily from treasury operation or corporate finance.
But quarterly and annual is very short-term thinking because you're literally thinking 3 months out versus building a solution, an ecosystem, a fintech platform took you 3 years, 4 years just to build yours out.
Absolutely.
So how would you create an incentive structure to reward a CEO or department heads over a 3-year period if you're already paying them out quarterly?
I'll give you another example. There's a very good example of banking collaboration to create something magical and then strangulating it with your own hands. That's called One Link. Brilliant idea, serves the entire market. We're beneficiaries. We love what One Link is and what it does for us.
Tell me what it does and tell me how it got strangled. Tell me, break it down simply.
So I'm just going to, quickly go through that process. 2-3 banks got together and said, if my ATM is in Karachi and your ATM is Lahore, our users should be able to draw money in Karachi and in Lahore. Simple. Have one
at each other's
switch.
ATM.
I have a common ATM switch, and that's how One Link came into being. And then they said, all right, why don't we do fund transfers as well, that my users can send money to you and, other way around. Fund transfer bhi aa gaya, phir wo bill payment. They had bill payments as well with, you could pay your electric bill or your Sui gas bill or your mobile top-ups.
Brilliant idea.
And then, because the banks owned it, 11 banks ended up owning it. And then they're like, because
let's not create something that is a confluence that solves the entire market problem because we want to do it first. Every bank would want to do it first. And that chokes up the OneLink innovation and thought process. Do you know that Rast was first offered to OneLink and they said, we don't want to do it. We're building our own thing. We'll do our own thing. We don't want any other sort of mandate coming in. And eventually the state had to step in and build Rast on its own, which is, exactly what a better version of what OneLink already does. But OneLink would have just solved that problem on its own if it
that was the natural evolution of OneLink. Actually, Rast is the natural evolution of OneLink.
So this is a market failure that you created something out of collaboration and then you made it into an oligarchy. And then, the state said, no, but we have to solve the problem of financial inclusion. We have to bring down the rates. We have to make it available to fintechs. We have to make it affordable for fintechs. You're using old formats. We need new formats. And the state said, can you do it? No, sorry, we don't want to do it. All right, we'll do it ourselves. And then they ate their lunch through regulatory mandates. So now Rast is there. It's a new company. Central bank owns it. The prime minister owns it. It's public property now. So it's not like 2-3 banks will decide its fate.
And where has that left OneLink?
So OneLink is obviously a key systemically important player, and the market still sits there. Most of the market still sits there. I think eventually in the next 4 or 5 years, certain use cases will remain on OneLink, and OneLink will have to learn to keep its sort of monetization and revenue aspirations on those use cases, or perhaps build new use cases. But the core responsibility of fund transfer, where Omer is debited and Faizan is credited, that is entirely moving towards Rast now. And a lot of new fintechs, if they choose to be regulated, such as us, who want access to the Rast rails, will then start going in that direction because, again, it's public property. So the commercials are not being controlled because the 11-member banks are dominating the pricing conversation. That's the promise of what Rast is supposed to bring.
Should they have actually IPO'd OneLink, made it a separate company and run completely independently?
That would have happened a long time ago. OneLink makes enough money to do an IPO. But again, this comes back to that whole idea of control.
So the mindset is different.
Yes.
It's a mindset problem.
Yes, it's a mindset problem that this is our thing and we want to control it, and it should remain within the 11 boys.
So if you were to change one thing about this clicky banking system, right, that is seemingly problematic for the future, what would that one thing be?
I think it's already happening. I don't need to change it. Perhaps I can wish that it's accelerated. Is the central bank Rast infrastructure is now moving towards open banking, which means that your banking rails or the banking data that you're sitting on is not your personal fiefdom. It is a public asset. It's your money sitting in your bank with whoever you bank with. It's your data. It's your persona. You're the data subject. The bank is simply a processor. So if someone else who you have given consent wants to use it for a different use case, the bank should not become a gatekeeper. And that's what open banking now promises, is that everyone should treat it as a commonwealth. That data or that deposit can instantly move across channels through some guardrails, consent, security, authorization, all of the necessary things to prevent fraud and misuse. But that open banking culture, it's already happened in Europe. It's happening in a lot of other jurisdictions. But I think that's where the banking landscape is now going, and central bank is driving us all in that direction. Because imagine if Haball had to be made now, as opposed to the effort that we made with 35 banks 8 years ago, that we had to go and talk to each bank, and each bank had 4 different vendors. So that's like 120 conversations to get the rails that we've built, which could have been just integrating into Rast and getting it done.
Right.
So that really opens up the door for a lot of fintech investment, collaboration, even for the banks to come up with better use cases. So that's one thing that I don't want to change because it's already there. I just want it to be accelerated.
So coming back from the banking side, right, and the underserved, let's say businesses feeling underserved by the banks, You're coming in to solve that problem. You're providing digitized invoices, which helps move the payments across faster, which also then helps track and be able to provide credit along the lines, right? Now, in the traditional method, it's very manual. You go in, make the payment, WhatsApp a slip and say, I've made the payment. And eyeballing it. And just, it takes up a couple of days, right? You're trying to digitize it, make it faster, streamline, and you can get everything done in the same day. Are you solving a finance problem, or are you actually solving a business efficiency problem? Because what I'm trying to get at is, are businesses inherently in this country operationally inefficient?
They are.
Right? And so even when you add this layer on top, you're not really solving the systemic issue that exists. You're just maybe tweaking the speed with which you get to that systemic problem, right? So doesn't that really expose the problem even more? Because I can hide behind 3-4 days of payment delays, but suddenly when everything gets paid fast, but my operational inefficiency is not there to support that speed, I mean, I'm now exposing the entire SME economy and showing how inefficient all the businesses in this country are.
See, any financial technology disruption has two consequences. One is efficiency, the efficiency and the movement of capital, and the other is transparency. This solves both. And I keep saying this to all tax authorities, whether it's in the Revenue Board or Punjab or FPR, more often with FPR, is your biggest friends today are fintechs. Because as an unintended or intended consequence of whatever we do, we leave a digital footprint behind. Every time we move money, you can't hide it. That's 3 organizations, Haball, HBL, and Meezan saying, yeah, that happened.
Right.
Because there are 3 ways you can verify that transaction actually took place. And from a sales tax audit perspective, Section 73, your invoices have to match your payment data. At least one side is covered that your payments are real because 3 powerful regulated institutions have said, yeah, that happened. So if you want to audit it, then there is a proof there.
Right.
But Faizan, another interesting thing that's been happening the last 3 years is the more you use digital invoicing and payments, it opens you up for credit delivery that we can give you supply chain financing credit. And that sort of good behavior, rewarding good behavior with credit, encourages him to start opening it more. He wants to be more transparent and say that, fine, my total business is this. I'll move the money through you so that you can see it. I'll move my invoices to FPR so you can see it. Please give me more credit, because what do I really want in life? I want growth. I can't give you growth because otherwise you'll have to borrow from loan sharks or from family members. That'll be at a musharka rate where I'll say I'll take 50-50. But there's this other alternative where an Islamic financial institutions can give it to you at like Kibor plus 3 or Kibor plus 5. And the only reason why they're not giving you growth capital or debt to enhance your business is because we don't see it. And this is one way to address that problem, that now that we see your payment movement, we're perhaps the first ones that have digitally distributed transactional financing. The entire MSME financing historically and even now is asset-based financing or institution financing, that we look at your balance sheet,
right,
and we're like, all right, we'll give you the money. Or we'll look at the asset that you've put up as a collateral and we'll give you the money. This is how MSME financing is happening, which is why it will remain stagnated forever. We're perhaps the first one that have digitally distributed across Pakistan in 3 seconds financing that is entirely based on your transaction. Show me the invoice, I'll give you the money. So that's what we're doing. I think that should create, and it is already creating, a culture where the more transparent you become, the more we reward you with more credit.
But how does that make them more efficient? Because they're still operationally inefficient businesses, no?
So, see, if you're talking about their sort of physical inefficiencies, such as transportation, logistics, production, I'm not an expert to talk on that subject, but I think one thing is there that when an incentive to growth comes up, you try to find those efficiencies yourself. That's the positive motivation that feeds in, that if I made money that I was making in 5 days and I started making it in 2 days, I'd be like, why don't I expand capacity? Yeah. Why shouldn't I? What am I doing wrong that I can't serve this need on a 2-day cycle instead of a 5-day cycle? These are some of those triggers that plays to the psychology of that MSME owner, expand the business.
But The same should have applied to those 11 bankers who clearly didn't do the same, right? They could have expanded their business. They could have grown the banks, but they were too lazy or not incentivized.
Dutch disease, this has been debated for too long now. It's the treasury yield. The government keeps borrowing. It's the easiest way to make risk-free returns. And that is obviously crowding out any desire to be an MSME. MSME historically has been badly executed as well, which has resulted in losses. Now central bank is offering 20% first loss covers as well if you do MSME credit. State Bank has given aggressive targets that you have to double up your SME portfolio. So right now there's right from the Prime Minister's office to the central bank, there's a focus on enhancing MSME financing. And in the next 5-year financial inclusion targets that the State Bank gives out publicly, they have kept supply chain financing, what we do, along with MSME financing as like hardline targets. Everyone should do it. So right now, we're in a phase where everyone's building the rails for it. But perhaps 3 years, 4 years down in the road, I think we will really see the needle move up because the central bank and the political leadership is aggressively pushing it. There are specific schemes now that are saying that we will give you subsidized financing or loss protection to the banks if you give credit to MSMEs that are supplying to exporters in a way to enhance exports.
Right.
Because an exporter would have multiple vendors. So these are these targeted interventions that the central bank is making, and the political leadership is also behind it, that perhaps will create this horribly low MSME credit in Pakistan.
How do you manage default risk? Because, I mean, obviously the banks are given some level of protection by the state, but what protection do you have and how are you managing that default
So
risk?
what we do is off-balance sheet financing. We're like the digital distribution or origination and processing partner. That's our role as Haball, as a platform. We have this feature called DEWS, which is Default Early Warning System. So 20 sort of covert features that look at invoices, historical trends, your equity in your skin in the game, your leveraging, your stock in hand, what your peers are doing, and basically tell the risk managers at the bank saying that, that guy in let's say cohort, he's about to default. So why don't you just make an intervention and try to recover your stock, whatever you have. So alhamdulillah, because of that, and because we've been very selective about where we're financing transactions where we have invoicing and payment visibility. You can't walk into a Haball and get financing. We actually approach these distributors through their principles and say that we see your numbers, you need this much and you can do more.
What percentage of your existing customer base are you approaching with that financing offering?
So see, you have to be selective. A lot of these supply chains are commodified, let's say steel or copper wires or construction bars. These are price-sensitive industries. Financing is high risk over here because of global market prices. These rates can go up and down, and when it goes down, that's a default risk for us. So you really have to pick out which supply chains can be financed. And we're obviously focusing on high-velocity FMCG, beverages, spices, milk. We're doing packaging material. We're doing white goods, electronics, air conditioners, refrigerators, aerated drinks, pesticide, fertilizers. So
things that move fast, basically.
Things that move fast, things that have 7 to 60, 90 days of credit that needs to be funded by someone else.
Right.
This in itself, there's an IFC report that says that the supply chain financing credit gap in Pakistan is 1.5 trillion. My estimate is that it's probably 3 trillion rupees. Wow. 3 trillion of credit that is being funded by corporate supply chains, manufacturers, or the distributors themselves out of their own equity, as opposed to being supplemented by the financial services.
So with this level of visibility across all types of SMEs and distributors, what is the one thing you've learned about small businesses in Pakistan that you did not know before?
So I think there's a massive cultural shift that's happening that we are not recognizing. Yes, we're living in multiple layers within the same country. There are different economies operating within their own microcosm. But I think the cultural shift is happening very rapidly because of an improving teledensity, about mobile connectivity, about through YouTube and the awareness that spreads immediately. So customers, MSMEs, the younger lot that is coming into business ownership, maybe their dad didn't do it, but the son knows how to be more digitally connected. That awareness is clearly visible. There are about 13,000 distributors who use Haball every day. These are MSMEs. These are organizations who just 5 years ago were moving paper or signing checks or dumping cash. Now, the fact that 11,000 people can do it, that means that it's applicable on a lot of other people as well. So it's a journey where you have to pick nodes, and not just Haball, a lot of other fintechs will have to master each supply chain. Maybe Haball is really good in FMCG, perhaps really good in the packaging industry or agri industry, but someone else might be really good in serving service sector or travel aviation. There's a credit need in aviation as well. There's a credit need in pesticides as well, crop protection, where loss coverage has to be structured very differently because, floods can happen or, pest attacks or insect attacks can happen. A lot of other ways, or livestock financing where, disease can kill the animal. So that kind of risk structuring, maybe we're not skilled in it. Maybe someone else steps in and does that part better than us. So if a lot of fintechs and banks create these specialized vehicles or community banks or community syndicates, then I think a lot of these problems can be attacked through each cluster. There is no one generic approach that Haball can cut across all supply chains and solve each one with the same lens. That can't work. Every segment has different nuances, has to be risked differently and priced differently. I know I sound like a banker now, but that's the reality of it.
And as you kind of expanded into this space, there's a lot of metrics that you can use to track business, specifically in fintech. Is there one metric that you realized everyone wants to track, but is actually a pretty useless metric?
I think throughput, yeah. Throughput is pretty useless if the take rates are very low or the conversion, there's a lot of churn.
So saying that you have 120 trillion of throughput.
Oh, no, we don't. I'm saying this is the size of the market.
Right.
This is the serviceable market. The TAM is 300 trillion.
Right.
The serviceable market for a company like Haball is 120 trillion rupee.
Right.
Segment that we serve. The actual mandate that Haball has today is touching 5 trillion now.
Right.
That's still 5% of GDP.
Right.
But it cuts across some very carefully selected supply chains that are at the top of that will be in your food basket. If you open the fridge, you will have those brands with you. So we're starting with that. You want to build a business. You build a business on a customer base that can actually help you grow.
Right.
And then use that revenue to subsidize your next wave.
So then why is
throughput, go segment by segment?
So then why is throughput a metric not worth looking at?
So I'm not saying I'm saying it's not the elixir that everyone was chasing. It is obviously something that we monitor on a weekly basis, on a daily basis. We monitor DRR, daily rates. But what I'm saying is that it's not the only metric. A lot of people went into headline valuation as a function of GMV. I'm negating that principle. That can't be the driver of valuation. Why? Because if it's resulting into gross loss or negative margin and no sight of net profits, then what are you bragging about?
As you went through this journey, what is the one thing you changed your mind about?
I think I approached destiny and results. You have to look at it from a faith lens as well, that when you're in an entrepreneurial journey, as you would know this as well, you're obviously flirting with your destiny. And you have to balance tawakkul with whatever was written for me. And, that I should be able to have within my reach what is good for me. And I realized that what is good for me is something that is perhaps already ordained by God. And I will be on the path of making my effort in order to get that. There's a simplified word in Arabic that explains this. يَبْتَغُونَ مِنْ فَضْلِ اللَّهِ وَاللَّهَ كَ فَضْلَ تَلَاشْ كَرْتَ हैं. And they try to find the grace of God. And that's the journey of any entrepreneur or employee. And he's trying through each phase in life, trying to find where is God's grace. So I think that conviction sort of hardened for me, at least. The roller coaster that at least I've gone through in this journey. Tell me, in 8 years, we've had how many political governments change?
God, I've lost count.
Yeah. How many times the chairman FBR has been changed?
Oh, that's...
How many times has the finance minister been changed? We've had 4 governor state banks during the life of Haball. It's a lot. That's a lot for a financial service, because all of these people make decisions that directly impact how we're going to perform today. Right? If there's a strike in Pakistan, our GTV, our throughput will go down to 20%. If there's an internet shutdown in the country, our GTV will go down by 40%. And that happens. There's nothing that I can do about that, but it's there. So I think I have changed in the sense that I have now accepted the asymmetry of Pakistan. I've recognized that there will be shorter cycles and asymmetric advantages and disadvantages to this business that we're learning. And you just got to be a man and take it. You can't cry about it. Just have to plan the next one better because it's going to happen. Maybe around the corner. So yeah, just plan it better and let that drive a better health for you. This particular crisis that is still not over since 2022 has dramatically improved our capabilities. Dramatically. So every crisis, there are some opportunities that come out of it. I think the biggest hit that we got out of this crisis was inflation feeding into expenses, which was for everyone, where 70% payroll. So obviously, if you want to retain good talent, you have to beat inflation for your team. And the other area that you get a hit is that I wasn't too worried about valuation, because valuation is an elixir. It's neither here nor there. It's perception at that moment of time is what private valuations are, because we're not publicly traded. So the core issue is that macro headwinds create this inability for your principal customers to not decide. And inflation leads to a higher policy rate. Higher policy rate means credit will be squeezed, especially to MSMEs. Why would anyone want to finance MSMEs when the government borrowing has suddenly surged in a crisis? So all of those things you just have to be better prepared for. And through successive crises, we've learned some new lessons that, okay, this is what you should have done to prepare for it. But alhamdulillah, I think the first crisis when we were entering into an IMF program back in 2018, new government. Second crisis, COVID. The world is shut down. You can't even meet people. How are you going to sell your product? And the third crisis is post-Ukraine war. The global liquidity drying out, Pakistan going into a political sort of stalemate, and then trying to find its feet, stability, getting into an IMF program. All of that uncertainty, I think we came out really strong because of it, and it actually fed into our narrative as well, because digitization of the economy became mainstream.
Right.
And the more you talk about it, the more we're happy.
Right.
So yeah, just have to, the thing that I learned or trained myself on, and I think now we are very conscious of that, is just being able to look at the macros and being able to accept the asymmetry that it produces.
How does that impact foreign investors looking at Pakistan?
Negatively. I'm a Pakistani. I don't have a choice. This is my skin. This is my blood.
So that means this asymmetry, this shorter cycles, all of that means that no one's going to come in from the outside. We have to do it ourselves.
Yeah, like hustlers will come in. Grifters will come in,
But those are really not the guys you want to play ball with.
No, you don't want them. You want serious guys, I think, which is why all us Pakistanis or the large business families, the conglomerates or the state institutions really have to step up and be first in trying to create domestic depth.
Why do you think that large business families have not gone into the venture space? And we're always looking for outside investors to come in and invest in Pakistani companies. None of the big families have really stepped up in that way.
Yeah,
that they could have.
Yeah, I think Ibn Khaldun called it 1,000 years ago. Third generations will fail you. That's the problem. I can't keep it any simpler than that. They've been raised with a silver spoon.
So they don't want to risk their...
They went to Boston. They had friends who were dollar rich. Wealth was in dollar denominated. So even if you're like really rich, PKR terms, they felt poorer to their friends in Boston or in, some prince in Denmark who was their friend who went to Wharton with them. I think that fake equivalents that are Pakistani, large conglomerates and whoever owns them, that has created this desire to have dollarized income, which is good if you're creating productive depth within Pakistan so that you can export our surpluses. That would be good. But it also means that you have your life world, your ability to dream in English, your ability to look at prosperity in US dollar terms or on New York Main Street or London Main Street. They're living in the consciousness of another world, which is not this world. And it's not their fault, that's how they've been raised. So this is why their commitment to Pakistan. Ask any one of them, are they settling their kids who are now perhaps 12, 15, 20-year-old in Pakistan to run their businesses that the others built? Are they doing that? If they're not doing that, their consciousness is not for this country. And I'm not saying they're traitors. I'm not making it sound unpatriotic. I'm just saying that's the product that was created by their fathers, perhaps.
Or was it created by the way the state has penalized them through taxation and various other ways?
Nationalization was just a dark chapter. That was a dark.
So how do we get over that? How do we convince these big family conglomerates that, hey, you know what? Fine, you want to go and create protection and you want to do your thing outside, but there is an opportunity here. Place a small bet. Place a bet, but place a small bet. Place something.
No, I don't think it needs to be a small bet. The kind of sort of deep well that we're stuck in right now, and cyclical shocks that we will keep on facing because of global inflation coming into Pakistan, is we need a very strong commitment to enhance our productive capacity. And if the state, because of fiscal space, cannot do it, I really think that the conglomerates, for all the formal wealth that they have or the informal wealth that they have within the country, whatever's outside, forget it, it's never coming back. But they really have to committed to Pakistan, and the state has to create incremental incentives that for investments, for new investments, this is how we're going to reward you. Or for surplus exports that you've been doing historically that your dada created, no, not that. That should be taxed normally. But incremental exports that you intend to do, we will give you some form of, blanket on that. But it can't be that only incentives will bring it back. It has to be this sort of commitment that we need to enhance the productive capacity of this country. You could wish that we had a $60 billion export or $100 billion export. Are you producing enough graduates to supply to the IT sector to reach $10 to $20 billion? Is anyone solved that supply problem? Or if you want to export certain chips or air conditioners or cars or carpets or whatever, have you produced that depth in terms of engineers, universities producing those engineers, mechanical engineers, and then having the factories, having the raw material to be able to produce that kind of surplus? Just giving a headline target and wishing that the downstream supply chain will magically appear, that's just not going to work.
So fixing that, there is a role you're saying that these big family conglomerates, third generation businesses can play, which they're not playing today.
Yeah, they're waiting for an...
Or they're not incentivized to play.
I think they're waiting. See, you have to understand one thing. They had their grandfathers had a beautiful opportunity. Pakistan was a fresh state. It was tabula rasa. You could write whatever you wanted to write. And then there was this 10 years of a stable government. Fine, the last part of it went south. But, I'm talking about the Ayub era where his word was law and he could just wish things to be. And he created the site and Korangi and the hardcore industrial and Tarbela and Mangla dams and all of those things.
Yeah, but he was also the one who created those industrialists who then had to be cut to size through nationalization, right? So
I'm not romanticizing the era, saying that that's good. I'm just saying, just narrating history.
Right.
Just saying, this group wanted that kind of tabula rasa, let me paint the canvas and write my own destiny. Let me get Nestle in and ICI in, get Coca-Cola concentrates and Pepsi concentrates or packaging or Honda or Toyota. Let me build the base, chemicals and steel and textile and export to the world. So they got all of that. This state and that state are very different. That state had probably just one enemy at that time, right? This state is in a very hostile. That state had a lot of patriotism as well, perhaps. We just came out of independence. There was this, perhaps, a national spirit, a national build-up. Let's build ourselves together. I don't think the state has that. Let's build ourselves together.
What is the spirit of this state today?
Hostile neighborhood right now. You know, we have 3 angry neighbors, and the regional connectivity to China is not that fluid, even though we're friends with them. And it's a very complicated world. It's, you know, a lot of regional, global paradigm shifts are happening, power structures are changing, and we're right in the middle of it. So in all of this, wishing that kind of state compassion or benevolence in giving you cheap land and incentives and build, we're not going to look, tax authorities are not going to do anything. We're in a tight fiscal space. We have low reserves, borrowed reserves. In that kind of tight corner that we're sitting in, the state benevolence that the conglomerates will ask for, it's just not going to come. It can't come. It's just rationally, the numbers will not make sense.
So what is the spirit then of this current state? If that state had a spirit of patriotism and optimism in the way you described it, what do you think is the spirit of this current state? And you are closest to SMEs. So you would be able to tell me exactly what that spirit is today.
I think right now there is no single, maybe this is a question you need to ask Nadeem Paracha, he's a cultural critic, but I think there's no single definition that all of us Pakistan can unanimously agree on, which is a scarier thing to contemplate, that we're not agreeing on that one single mission. How do we define ourselves? What's our identity? What is that national glue that keeps us all together? Is it our faith, which is why we wanted to separate from India? Or is it some desire to be a prosperous nation like Vietnam? Or is it to be a regional power where all the regional geopolitics goes through us or through our back channels? There's so many definitions, depends on who you ask at this point in time. So I think the real problem, I'll give you a social philosophical answer, is that the problem of definition, we still can't define ourselves, which is a bigger problem. Because without identifying the nature of my soul, how can I tell you what my telos is? What is my purpose? I don't know what my soul is. So where am I going?
So Pakistan doesn't know what its purpose or what its soul is.
Yeah.
And that is the first thing we need to figure out.
Apne aap ko dhoondne.
And how do you get there?
That's both academic, spiritual, multiple layers of that. It's years of cultivating the human mind.
Is it top down or is it bottom up?
It's top down from an institutional perspective. We have education institutes, we have madrasas, we have masjids. That network of broadcast and dissemination, along with this digital medium, exists. And just need that single narrative or those 2-3 national spirit to be identified where glues us back together. If everyone is in it for provincialism or for what is my share in this, then obviously they will fight for those shares, which is why that would eventually lead to the thoughts of separatism. But that's why you have to glue it back. Oh, remember, your dad has failed you on so many things. Your mother fails you on a lot of things. You fail your parents on a lot of things. But it all comes back to the fact that, we're all the same blood. We all live together. We all still love each other, despite the grievances that we all still love each other. And that glue of, why are we together and where are we going with all of this? I think that is something that needs to be clearly defined. And you're right, top down it needs to be defined. That's the glue. That character, the leadership has to really say, this is what it means to be a Pakistani.
And until we get that glue, we're just going to ditter along the way we are.
Absolutely. It's like
with limited foreign interest, with no one really paying attention, because we ourselves don't know who we are. Why would someone else care to figure out who we are.
Yeah.
You know?
There's a masnoon dua. I think it reflects our situation really well, and I'll translate it for you. So it says, Allahumma inni a'udhu min al-ajzi wal hammi wal huzni. That, Lord, I seek your refuge from the fears of tomorrow and the sadness of the past. I've made mistakes and I'm sad about it. It wears me down, but it shouldn't destroy me. I still have to march forward. But I'm also fearful for what's coming in the front, because something can go wrong. There'll be a dacoit sitting on the corner and it might snatch something from me or kill me. So I seek your refuge from that, from the sins of the past and the bleakness of whatever's in the future. Wal ajzi, wal kasli, that I am overpowered by someone. I've lost my sovereignty. Wal kasli, and I've become lazy. Can't even figure it out. How do I restore my strength back? The days when you just get out of a sickness and you don't really feel like showing up to work. You're just lazy. Wal jubni wal bukhli, and from hunger, scarcity, where I don't have food. I fear that I won't have enough food on the table, and I'm fearful of that. I'll act on the principle of not having food. Wal kasli, and that I've become sust. I've become laid back. Wadala iddain, and the shadow of debt. 75% of GDP is debt. All of you and I are makroos by 300,000 rupees per capita. So, وَقَهِرِ الرِّجَالِ, and because of that shadow of debt, we have the kahar, the oppression of powerful men on us, that they decide our fate. These are, whichever Western powers or Eastern powers or whoever, who would decide, or these powerful global institutions who decide how you ought to live. So that, I think it's a powerful sort of dua.
Was this written for Pakistan?
No, this...
I mean, it sounds like a custom dua written for...
Dua. It's a prophetic, it's a masnoon dua.
But it literally sounds like it was written for this moment in time.
Yeah.
For this country in this moment in time.
Yeah, absolutely. And I recite that when I pray, and I say, that's what I don't want to be compelled. Allah protect me from being compelled to act in ways where it's not you who told me to do it, or I decided it myself. Because if I let other people decide my fate, then obviously I'll choose things that are not good for my family, that are not good for me. And I think Pakistanis, all of us as a family, that's where it comes from, that we don't have economic sovereignty, and that leads to weaker national sovereignty. And in order to restore that, the first thing is, self-sufficiency, having your own productive capacity, having your own debts, having your own capital applied to your own thing, your capital not running away from your own markets. All of those things come in order for not just the conglomerates, for everyone in Pakistan, for that 50% that chooses to sit outside the formal network, all of them has to be cohesively sort of glued up together to that one soul, that one spirit that defines us as Pakistanis. Now that's a problem for the Pakistani intelligentsia, political, military leadership to come up with that one thing that glues us all together.
Very well said. This was really, really, I think, hit the spot. I think that was a good summary of where we stand and how we should avoid sort of staying stuck in this moment. And I think that ultimately, one of the things that I always say is, we always look at others for help. Start with your own circle of influence. Each one of us influences at least 10 people every single day, whether it's our family, people we work with, someone along the way. As long as you can help, support, and create that positive environment and do whatever you can in that 10, 12, 40, 100 people's influence circle that you have, you've done your part.
Yeah, absolutely.
And the rest you kind of leave to fate and to God.
Yeah, absolutely. I agree.
Thank you, Omer. Thank you. This was a great conversation. I know we talked about a lot of different things, but I love the business you guys have built. I hope that it can break into that 120 trillion space, because that is where the real opportunity is. And most importantly, I think that if it can help people build trust in digitizing and bringing everything into the fold, and at the same time also make the regulatory authorities realize that maybe the taxation system needs to be relooked at, I think you would have done this country a huge service. and wish you all the best along the way. Thank you for tuning in. Like, subscribe, comment, and we'll see you next week.